Welcome to the Whitwam Wealth Real Estate Podcast. Today's episode, the Anti-Bank Blueprint, how smart investors build wealth without begging lenders.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam, and today's episode is the Anti-Bank Blueprint, how smart investors build wealth without begging lenders. How would you like to build a real estate business without ever depending on traditional banks? No credit checks, nothing in your credit history holding you back, no endless paperwork, no waiting weeks just to hear denied. Today, we'll break down what I call the Anti-Bank Blueprint. It is a smarter, faster, more flexible way to invest in real estate. Many real estate investors feel like the system wasn't built for them. And you know what? They're right. But there's good news. You don't need the traditional system to win. Let's get to it. Point one, the problem with banks. Let's start with the obvious question. Why so anti-bank to begin with? Well, banks are slow, they're rigid, and they're risk adverse. They want exceptional credit, they want steady W-2 income, and a clean financial history. But successful real estate investors move fast. They don't always have clean credit profiles, and they certainly are not risk adverse. They are out on the front edge. And generally, deals don't wait 30 or 60 days for loan approvals. And great opportunities don't care about your credit score. See, banks are built for stability, for retail investors, not for speed. This mismatch of priorities is where so many investors get stuck. The second point is that anti-bank really means having clarity about where money actually comes from and how it operates. Now, let's be clear. Let's clear this up. Anti-bank doesn't mean anti-money. It means using alternative funding strategies instead of relying solely on traditional banks. It's about other people's money. We call it OPM. It's about control, it's about flexibility, and most importantly, it's about access. When you remove banks from the equation, you remove the number of bottlenecks. All right. Third point, the core pillars of this blueprint. So let's look at some of these core pillars of the anti-bank blueprint. Pillar one is private money. Private money is one of the most powerful tools in your arsenal. This is capital or cash from individuals, not institutions. This can be friends, family, colleagues, or networking connections. These type of lenders are looking for returns, and they're not focused on your credit. You set the terms together. It's faster, more personal, and often more flexible. Pillar two, hard money. See, hard money lenders are asset-based. That means they care more about the property's value than they do about your financial story. And these loans are generally fast. I have had funding on these loans in as quick as 2 days when needed to be. And yeah, it's true, the rates are much higher, but speed to deals wins deals. Pillar three, other creative financing. This is where things get more interesting. Creative financing strategies like seller financing, lease options, subject to deals. See, this is where I love to work. I love all these creative things. I love private money, I love hard money, and I certainly love creative financing. You got to remember that you're not just buying a property. You're structuring opportunities. Let the seller become your bank. So, point four, why this works. Here's why the anti-bank blueprint works so well. It removes gatekeepers. It lets you close transactions quickly. This opens doors that traditional financing keeps closed. And most importantly, it lets you stay in control of your growth. Point five, the risks. This isn't, make-believe. It's not magic. With any investing, there is going to be risks, and you have to be comfortable with those risks. And that's why you need to be educated, and you need the information to minimize those risks. Private lenders expect results and returns. Hard money can get expensive if you hold it too long. Creative deals require skill and negotiating ability, and especially when you're starting out. Get an advisor. Find a great coach that can hold your hand. That's why we started Whitwam Wealth Academy, is to help investors who need a little hand holding through projects. And this can happen if you've done 100 deals or if you're doing your first. A lot of times when you're moving into a new venture, it's just nice to have somebody there that can be your set of training wheels. And this is what a lot of people miss. They miss the ability, they miss the need to have manageable risk. And because of that, they get out in front of the wave and they crash. And you don't want to do that. Point 6, how to get started. So how do you get started building your anti-bank blueprint? Step 1, build relationships. You need to talk to people about what you're doing. If nobody knows that you're investing, if nobody knows you're looking for capital, it's going to be much harder to find it. So you need to build relationships with people. I believe in strong networking, whether it's online or in person. I do a lot of in-person networking. People need to know what you're doing. Step 2, learn the numbers for your deal analytics. You have to be able to analyze deals, and you have to be able to do it quickly. You have to understand your market that you're in. You have to understand the cost of closing, the carrying cost. You need to be able to analyze these quickly. Money always flows to good deals. There's not a shortage of money out there. There's money looking for good opportunities, good deals that can be supported by the asset and the deal itself. One deal, one partnership, one win. Just start small. It doesn't take doing a massive portfolio or a huge multi-deal purchase or going into a huge multi-door deal to begin with. Just one deal, one partnership, one win. Momentum builds fast when you remove friction. Let me wrap it up with this. The secret that you will discover is wealth in real estate investing isn't about who you get the money from. It's about getting the money. So that's why it's so important to implement these steps. It's about how creatively you can structure an opportunity and make the numbers good. The anti-bank blueprint isn't just a strategy. It's really a mindset shift. That's all for this episode. If you found this episode valuable today, be sure to subscribe, leave us a review, or share it with another investor who needs to hear it. Thank you for joining on this episode of the Whitwam Wealth Real Estate Podcast. Be sure to check out our previous episodes of real estate-related investing topics. I'm glad you're part of our growing real estate investing community. You can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, iHeart Podcasts, YouTube, or wherever you enjoy listening to podcasts. This is Scott Whitwam. Be sure to join me on our next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.